Alrighty, so let's take another look at a phase A LC1 trade. Now, in this example, the M15 price action, it's a fair bit uglier than the previous examples we've looked at, but I think this is a good example to show you of how you can trade the market a little bit uglier, but within reason, okay? And it's because it's backed up by the higher time frames. And yeah, let me just show you the confluence as to why you can have confidence to trade when maybe the market doesn't look as beautiful as sometimes we want it to, we want to wait for, but will become clear as I go through it. So 4-hour swing structure, hopefully you can see we've clearly switched bullish, right? And we've had this sustained 4-hour bullish trend and then started to gain a lot more momentum. Now, arguably, this is kind of one of those a bit of a debatable pullbacks, whether you would view that as internal or swing structure. When this was live in the market, I viewed it as an internal pullback, so I'll be consistent with that, okay? But what happens when we come into this strong 4-hour internal low, right? Because at this point, we're not sure when price is coming down, are we going to have a deeper 4-hour pullback before we potentially higher or potentially, we even reverse? But what do? We come into a nice POI. Why do I say it's nice? Well, it formed really well, right? Nice big candle, big thrust candle that closes above it, leads to a break of structure, nice big impulsive move, and it also took liquidity, right? So this is textbook of how a textbook, strong POI would look. We come in with a fair bit of momentum, but then what happens? We get a 4-hour bullish change of character. Okay, so that is a very good signal, not a guarantee, but a very good signal now that that's the end of this internal pullback. 4-hour bullish chalk after mitigating this extreme internal demand, really strong demand, big V-shaped reaction as well. Okay, now it's very likely that price is ready to target this week high. Okay, pull back into a zone, 4-hour bullish chalk, V-shaped reaction, right, big wick, showing that momentum. We're coming back into this 4-hour demand, right? We can draw that on. It's not the most significant demand in the world, but it did, this sell to buy candle, right, did lead to that 4-hour bullish chalk. We pull back into here, so now it's very likely that we're just looking for price to make its way up to at least this 4-hour high here, okay? So the 4-hour chart is painting a pretty decent bullish picture. But even before I jump down to M15, I can see we've ranged for 1, 2, 3, 4, 5, 6 candles, which is going to be 6 times 4, about 24 hours, right? So I know the M15 is probably not going to look amazing. But let's jump down and let's take a look at that and see if we can make some sense. Now I'm going to zoom out a little bit because in this specific scenario, it did actually give us a really big M15 swing range. And the reason why is we had this M15 swing pullback here. We got a bullish M15 breaker structure here. We then pulled back. We failed to close below that low. It was just a sweep. Okay, so we actually remained bullish. And then we got a breaker structure here. The reason why we end up having such a big M15 swing range is because after this breaker structure, all of these pullbacks here were not significant. They were not big enough relative to the recent price action for me to classify these as swing pullbacks. So all of these are just M15 internal pullbacks, okay? And then eventually, as soon as we get this more sizable pullback at this point here, this is where I'd be labeling this up here as my M15 swing high now, okay? So now this is one big M15 swing pullback, and obviously we're looking for them price to go up here. So just so happens sometimes when this happens, when you get like a move that doesn't form a big swing pullback, we end up with a big swing range, okay? So technically this is our, just for the interest of making it clear, this is our weak M15 swing high, and this is our strong M15 swing low, okay? So let's start to build a narrative, okay? It's reasonably simple so far. In that, we got bearish M15 internal structure. Why? It turns bearish to facilitate the M15 swing pullback. We come into that extreme 4-hour internal demand, and then we get a nice big bullish move to the upside, giving us a bullish M15 breaker structure. So now we have bullish M15 internal and bullish M15 swing, right? They are aligned. That confirms to us that this swing pullback is over. So now what is our expectation? Our expectation is that the bullish M15 internal structure will remain bullish until it takes out that high. That's the primary framework that we always follow, right? So this high has led to a break of that high there. Sorry, this low has led to a break of that high. Therefore, this is a strong low. We expect price to pull back, but not to break it. And then we expect a target of this week high. This then becomes a strong low, right? So on and so forth. You should be very, very comfortable with that. So longs now are phase A. And ideally, that's what we want to be focusing on because the 4 hours bullish, we've mitigated that demand. We're expecting price to target this weak M15 high. Right, we have the bullish M15 internal structure. Longs are definitely the more probable scenario. The reason, I'm just going to delete this just to make it a bit more clearer. The reason why this is a bit more ugly and tricky is if you look at the immediate price action, although we know this is our weak M15 internal high that we want to target, and this is our internal low, if we look at the immediate price action that's in front of us, which I'll zoom into in a minute, it's not as clear. So even though the larger internal structure, we know the directional bias, if we actually zoom into this bit, it's like, okay, well, does it make sense for me to look for longs right now? And where do I get long? Because if you actually just kind of, if you draw a box around it, like all of this is what I just call range bound price action, right? This low here has not broken any significant structure to the left. But significant, I mean like the top of this leg, right? It hasn't broken that internal high, it's just caused a chock. Likewise, these highs failed to break this low, they've got broken. This high has failed to break this low. These are just kind of weak highs and weak lows either side. This is range bound price action. It doesn't really give me a very, very clear directional bias at this point. But overall, we are obviously more bullish than bearish. Hopefully I've explained as to why. So when price action is like this is where I would exercise caution. You probably found this in your backtesting the live market, not to try and force trades in here. Okay, you might be able to catch this short from the supply. Maybe, looking from longs in this demand, you get stopped out. Maybe you were trying to short from here at this point when it pulled back in. Maybe you're trying to long from here. Maybe you caught it, maybe you didn't. It's not very clear. Whereas when you compare it to like here, right, the directional bias is clear. Just we want to buy, we want to buy, we want to buy, or at least the directional bias is clearly long. Don't necessarily have to trade it. Okay, bearish IBOS. Okay, now we clearly want to be looking for shorts from these strong highs, right? Structure is very, very clear. There's no if, buts, or maybes. We want to be shorting from this high, targeting the weak low, okay? This immediate price action, this is where I see a lot of inexperienced people unfortunately get caught out here. Look, I'm not having a go, it's understandable. Like we all get caught out in these environments where it can look